Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the money moves that shape our world. And today we have Sadot Group Incorporated, and I have a feeling this filing is going to tell us a story about growth, or maybe a struggle to keep it going. So let's dive in and see what is really going on behind the scenes. We're talking about a company that just raised some serious cash, and we need to understand exactly how they plan to spend it and what it means for their future. So Sadot Group Inc. is reporting some pretty significant financial maneuvers that all kicked off around October of 2025. It looks like they entered into some agreements to sell shares of their common stock to accredited investors. Now, accredited investors are typically wealthy individuals or institutions that the SEC considers sophisticated enough to invest in riskier ventures. What is interesting here is how they're redoing this. They're reusing a shelf registration statement, which basically means they got permission from the Securities and Exchange Commission, or SEC, to pre-register shares they might want to sell in the future. This lets them act pretty quickly when they see an opportunity to raise money without going through the whole process each time. They re-estimating LA'll bring in about $538,600 before taking out any fees and other costs. This money is earmarked for whatever the company needs for its day operations and general working capital. Now let's look at some of the finer points of these agreements for a whole year after the 15th of October 2025. These investors have a special perk. They get to jump in on up to 25% of any future fundraising if the company decides to sell more stock or something that can be turned into stock like warrants or convertible bonds. This is good for them because it means their investment can grow if the company does well. There is also a lock-up period. This is pretty standard for 90 days after the deal closes. The company itself can T-sell any more stock and neither can its directors or top executives. This is to stop a flood of new shares hitting the market all at once, which could drive the stock price down. It is basically a way to stabilize things after a new offering. To help make this all happen, Sadot Group also brought in a financial firm called Dawson James Securities Incorporated. They were hired as the exclusive lead placement agent, which means they helped find these investors and put the deal together. This engagement was for 1 week, and Dawson James gets a commission of 7% of all the money raised from the offering. They also get reimbursed for certain expenses and are protected by an indemnification clause. So if something goes wrong due to a mistake in the paperwork, they likely won't be held responsible. The company also put out a press release on the 15th of October 2025 to announce they had priced this offering. This is just to make sure all investors get the same information at the same time, which is what Regulation FD or fair disclosure is all about. Here is where we see the actual form of the securities purchase agreement. This document would contain all the specific legal terms and conditions that Sadot Group Incorporated and the investors agreed to. This is the engagement letter with Dawson James Securities Incorporated. It details the services they provided and the compensation they received. And this is the form of the lock-up agreement that the company's directors and officers signed. It outlines the restrictions on their stock sales for that 90-day period. This is the press release that announced the pricing of the offering. It is essentially a public announcement of the deal. Now let's talk about what all this really means. Sadot Group Inc. is in a phase where they need capital to fuel their operations or perhaps some new initiatives. Raising about $500,000, though modest, is a clear signal. They are actively managing their finances to ensure they can continue growing or at least maintain their current business. The fact they are using accredited investors and a shelf registration suggests a certain level of established operations and a proactive approach to fundraising. The right of participation clauses for the investors are a good sign for those investors, showing the company's commitment to keeping them engaged and rewarding their early support. However, the 7% commission to the placement agent is on the higher side for this type of offering, which could eat into the net proceeds. Looking ahead, the company's ability to effectively use this capital for general corporate purposes and working capital will be the ultimate test of this fundraising effort. If they can translate this investment into tangible business improvements and growth, Sadot Group could be on a solid path forward. But if the funds are mishandled or the market turns unfavorable, the impact of this capital injection might be short-lived. It is a crucial moment for the company, and investors will be watching closely to see how this money is put to work. What is your assessment of Sadot Group's current strategy based on this filing? Do you see this as a smart move for growth, or does it signal potential challenges ahead? Let us know your thoughts in the comments below. If you found this deep dive into Sadot Group's finances helpful, hit that like button and subscribe to Corporate Decoder for more. And don't forget to join our Discord community for even more exclusive discussions and insights. Thanks for watching, and I'll see you in the next one.